Welcome to your Financial Markets Daily Brief. Something really strange is happening in the markets right now. On the surface, things look pretty good. But when you start digging a little deeper, the signals are telling a completely different story. And honestly, it's a bit concerning. So let's break down what's really going on.
Okay, let's just get right to the heart of this puzzle. How is it possible that stocks, gold, and commodities are all going up together at the same time? I mean, these things usually move in opposite directions. This just isn't supposed to happen, and it's a huge clue that something much bigger is at play here. And just look at the scoreboard. The S&P 500 is hitting record highs. Gold and silver, they're absolutely exploding. You've got copper surging, which usually means the industrial economy is strong. And then even emerging markets are on a major bullish run. When you see all these different assets marching upward in lockstep like this, it tells you there's some powerful underlying force that's pushing everything up at once. So to really get our heads around this, we're going to tackle it from 5 different angles. First, we'll look at why the market seems so contradictory. Then we'll dig into what's happening with the US dollar's reputation. After that, we'll listen to the macroeconomic warning that gold is screaming at us. Then we'll see how this could all lead to an inflationary wave that hits your wallet. And finally, we'll ask the big one: is the entire financial system heading for some kind of major reset? So, what could possibly be the one single reason powerful enough to lift all these different boats at the same time? Well, the answer isn't about growing confidence in the economy. Actually, it's about a growing lack of confidence in something much more fundamental. And that one powerful factor has a name. It's called monetary debasement. And what that really means, in simple terms, is a loss of faith in the value of our money. Say, people aren't just buying stocks or gold because they think they're great investments. They're doing it because they're trying to sell their dollars. It's become a race to trade cash for anything that might hold its value better over the long haul. And if you want to see what this loss of confidence looks like in the real world, we've got a perfect and frankly pretty alarming example that just played out in Japan. So check out this chain reaction. A new government comes in and they promise more spending and tax cuts. Well, no surprise, the deficit just explodes. To pay for it, they have to flood the market with a ton of new government debt. But this time, investors said, no thanks. The bond market totally collapsed and interest rates shot through the roof. The only thing that stopped the free fall was the central bank stepping in to basically prop the whole system up. And this right here is the critical takeaway. This is not just a Japan story. The message on this slide, that the system is fundamentally broken and needs constant intervention to even function, that applies almost everywhere. Most major Western economies, and even China, are drowning in debt. And this dangerous cycle of overspending followed by central bank bailouts, well, it's becoming the new normal. Okay, let's pivot to gold because this is where the story gets even more interesting. While investors are clearly seeing the writing on the wall, it seems like policymakers are completely downplaying one of the loudest warning signals out there. We're seeing this massive disconnect. On one side, you have officials saying, hey, gold's rally is no big deal. There's no immediate risk to the economy. They just see it as another asset price moving around. But on the other side, the market is interpreting this surge as a huge flashing red light, a warning about long-term instability and the debasement of our money. So while officials might be right in the super short term, gold is absolutely screaming a warning about the future.
I love this quote because it really just nails it. The rise in gold isn't just some data point on a chart. It's a powerful vote of no confidence. It reflects a deep, growing distrust in the people who are supposed to be managing our economies and protecting the value of our money.
All right, so let's bring this down from the clouds of macroeconomics, because this isn't some abstract debate. This whole trend has very real, very direct consequences for your money, for inflation, and for your wallet. I mean, just look at the policies being pushed right now. There's an official tolerance for a weaker dollar, there's constant political pressure to keep interest rates low, and there are plans to inject hundreds of billions more in government spending. Any one of these things can push up prices, but when you mix them all together, well, you've got a powerful cocktail for inflation that could easily push us from 2% to 4% or even higher. And don't let a couple of percentage points fool you. That is not a small change. A sustained jump in inflation of just 2% can wipe out a full quarter, 25% of your purchasing power over a decade. Think about that. A quarter of your savings, your wealth, just vanished into thin air. That's the real, tangible cost of all this. And of course, this kind of environment doesn't hit everyone the same way. It creates what economists call a K-shaped recovery. If you own assets like stocks or real estate, their value gets inflated, so you're protected. But for lower income earners or people on a fixed income, it's a total disaster. The cost of living skyrockets while their wages can't possibly keep up, which just leads to real economic pain and widens the inequality gap even further.
So all of this brings us to our final and maybe most critical point. It's about the very foundation of our financial system and where smart money is running to find some safety. This is a massive shift in how the financial world works. For generations, the safest place you could put your money was in government bonds. Now, those bonds are seen as the source of the risk. So instead, investors are treating things like gold, copper, and even the stock market as the new safe havens. It's a place to hide from the slow-motion collapse in the value of our money. So with trust in the bedrock of the old system, government debt and the currencies they're priced in, with that trust visibly crumbling before our eyes, we're left with one final unavoidable question. Can this current setup even continue? Or is the system headed for a fundamental change, some kind of great reset, simply because the old rules no longer apply? That is the hidden message the markets are sending us, loud and clear.